All right, we're looking at whether money is able to perform all of its functions in an economy that is experiencing a high rate of inflation. This is from June 2014. This is question 4B worth 13 marks. This is an evaluation question. We know that because it's part B. It's in section B and it's the second question. The 12-mark questions require you to analyze, not evaluate. And this blue part is from the mark scheme. So let's see what they are looking for in this essay. For analysis showing how the functions of money are affected by a high rate of inflation, up to 8 marks. The analysis will include an explanation of the functions and the impact of high inflation on each. For example, medium of exchange, store value, and so on. For evaluative comment on the all its functions aspect of the question, up to 4 marks. So to get 8 marks, 8 out of 8, to get all the analysis marks, I need to talk about the functions of money and the relationship with the high inflation impact. To go to the full 12, I need to evaluate. So let me get started. Money is anything that serves as a medium of exchange, unit of account, and store of value. During periods of high inflation, the price level is rising at a rapid pace. The functions of money are challenged during these periods. All right, I made here a comment, and these comments are already done. So I'm going to read them for you and go back and forth between the essay and comments. L1 marks are earned by introducing concepts from the essay prompts and defining them clearly. Firstly, money serves as a medium of exchange. If an individual chooses to purchase a good or service, money will be accepted as payment. An example of this would be a student purchasing a textbook for school using currency. During periods of high inflation, people may continue to accept money, but would be increasingly difficult to do so. This is due to the fact that since money is losing its value so quickly, a shopkeeper may prefer another item in exchange as opposed to that specific type of money. I want to point out now that they've raised a key point. They've built a connection between high inflation and the medium of exchange. And now we're going to really dive into the analysis, which is the impact, right? Going through to make sure it's clearly explained to the reader that, yes, I understand what the impact is. I will tell you. So let me go back a step. This is due to the fact that since money is losing its value so quickly, a shopkeeper may prefer another item in exchange, as opposed to that specific type of money. As inflation rises rapidly, money does not purchase the same items it used to. Therefore, business owners may be reluctant to accept money as payment. In Zimbabwe, during a period of hyperinflation, businesses started accepting other countries' currencies and gold as opposed to the national currency. However, money is not defined as a national currency, but only as something that is accepted as payment. In this sense, although the money has changed, money is still being used. So I should say although the type of money. So this little sentence at the end and the last two sentences are evaluation marks. Because you've described the relationship and now you're saying, well, I want to consider in the bigger picture if that's always going to be true, because money as a medium of exchange, that's still going on, right? But it's just the different type. Secondly, money serves as a store of value. This means that an individual can store money for later use and it will have the same value when it's later withdrawn. For example, if I put my money into the bank on Monday and withdraw it next week, it should still retain its value. This is L1, L2 because you're telling me what store of value means and then you're kind of explaining in context. Now, during periods of high inflation, this is the function of money that is immediately challenged. Now we're making another point, and we need to explain why. Saving money for future use will definitely ensure the saver loses the value of their deposits. If an individual deposits $100 today and goes to withdraw next week, that same $100 may not buy as much as it did previously. Therefore, it is almost certain that money is not able to serve this function during periods of high inflation. All right, there's a little bit of evaluation there at the end too. The analysis goes back to high inflation and money's function as a store of value. Good paragraph. Thirdly, money serves as a unit of account. This means that people can determine the worth of something by looking at its price and referring to it in money terms. Its value can be determined to be based on an understanding of consumers and businesses of money's worth. However, during periods of high inflation, it becomes much more difficult to serve this function. This is because inflation is rising at such a rapid rate that both producers and consumers struggle to anticipate the true price and value of something in money terms. Okay. This paragraph is good. It does unit of account, high rate of inflation, builds that connection. I think it could use an example that would make it a little bit clear. However, I do believe that they have made the point clearly in this paragraph. And now we're going to jump to the evaluation. On balance, the high rate of inflation will not affect all functions of money equally. All right, good evaluation point, because that tells me that they are going to now write about which one is going to affect from the function that is most affected to least affected. The severest impact will be on its function as a store of value. Money will lose its ability to retain value. Secondly, money may continue to serve as a medium of exchange. However, the accepted form of money may change. Finally, the unit of account can possibly continue, but it depends upon how high the rate of inflation rises. A sustained rapid rise of prices would have a much more severe impact on this function. A sustained rapid rise would harm all three functions much more than a short-term moderate rise would. Excellent evaluation. It's ranked the influence of high inflation on each of the functions, which is a very effective technique in evaluation, is to rank something, right? The impact of something, ranking its effectiveness, or looking at policies and seeing which one is the most effective and least effective, or why. This is something that you'll see A-star students do. So in my opinion, the student all throughout understands the content, the definitions. They've explained them clearly. They've established the relationship with high inflation and the functions of money. And they've also had the insight to develop a very deep evaluation about how strong those relationships are. For that reason, I give this essay 13 out of 13 marks.